Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to bring you some foreign exchange charts to look at. And the first one I'd like to look at is the euro against the dollar. Now here we have a higher fourth bullish white soldier yesterday, but still seemingly an indecisive spinning top pattern, though it was the second consecutive close over the significant medium moving average, which is currently 110.67, plus the very recent 50% Fibonacci line at 110.28, and it's also a continued follow-on to the key reversal seen last week. However, at the moment, the mid-November high, just under 111 even, seems a little out of reach, despite the recent fast ascent. The next chart I'd like to look at is cable, aka sterling against the US dollar. A third bullish white soldier yesterday, and today a new high, not seen since June. The market yesterday tested the October high at 130.12 and today has pushed up through it. Overall, the idea that the move since early October may be a topping or bullish halfway hesitation action have in reality over the last few days veered very much towards the halfway hesitation idea. It's time to look at the potential target X for such a move. Well, that would be in the 135.85 area. Yes, I know it's far away, but it's better to mention it not at this net now than any other time. Now, we have to look and see if the next few closes justify such a move. The next chart I look at is the euro against sterling. A wannabe bearish engulfing pattern yesterday, but it did have a close back below the previous broken, but still influential, very shallow lower time, currently 85.30 of the 2017-2019 very mildly bullish shift pitchfork. It was also closed back below the support, the interesting super support of 38.2% Fibonacci, showing the big old 2006-2008 move at 85.52. Interestingly, the topside was again capped, as it has been on a closing basis these last many days, by the short moving average. That's currently at 85.5. Do not underestimate this moving average. It shows its best efforts on a closing basis rather than as an absolute. Today, we're pushing down to a fresh low, not seen since May, within striking distance of the 2019 low at 84.69. Finally, we've exited, perhaps for a permanent time, the off-mentioned congestion zone, dating from March to April this year, between roughly 85.20 to 86.80. This is now coalescing as resistance. The next chart I'd like to look at is the US dollar against the Japanese yen. A second bearish black crow yesterday and a suitable follow-on to the previous session's key reversal down. Prices closed below the significant middle time, currently 109.25 of the November 2017 to October 2018 very, very mildly bearish shift pitchfork. This level was a super key support on a closing basis, is now super key resistance on a closing basis. Prices halted at the combination of the old 50-cent Fibonacci line of 2016 move at 108.86 and the long moving average, currently 108.85. Today, we've moved lower and we're now looking at the next significant support, the 50-cent Fibonacci line of the 2019 move so far at 108.41. Finally, all this action has really queued us up to have a weekly key reversal down. More on this as it develops. The final chart I look at is the Aussie dollar against the US dollar. A second bullish white soldier yesterday and a suitable follow-on higher to the previous session's large bullish engulfing pattern. However, the rise was not as high as one would have hoped, as the market was in fairly free territory up until the 50-cent Fibonacci line, the July to October move at 68.75. And it was the proximity of this resistance which I suspect stalled the rise and has given today's bearish pullback all the way down to the medium moving average, currently 68.13, which actually was the anchor for yesterday's rise. I've mentioned quite a few times now how recent action in November looked like a counter to October's monthly key reversal up. It did, with a monthly bearish harami for November. Yet this week has countered that counter to a certain degree, though this is all now looks suspect and confusing. Well, that about wraps it up. So in the meantime, good trading.